Hey, and thanks for coming back to the Real Estate Marketing Podcast. Before I jump into today's interview, I thought I should give you a little bit of information about what this episode is all about. When I first started providing content for people about real estate, I noticed I started to get a lot of people who were from India that were interested in investing in real estate. It was actually a staggering number of people who reached out to me who were from India. I originally thought I wouldn't be able to help them very much because I don't know anything about investing in India. It wasn't until I got connected with Sanjeev that I thought, you know what, I think we could do something for them. Sanjeev and I got connected through LinkedIn and TikTok. We started talking about how we could record an episode to help people who were from India or people who were non-resident Indians, meaning they live somewhere else, but they were originally born in India, all about passive income investing. Sanjeev is a really cool guy too. He's the CEO of Mantri Developers in India and in Dubai. They have over $2 billion worth of investments all over the world. He's currently living in San Francisco, California, and I feel super blessed that he took the time to record this podcast episode with me. You'll also hear at the end of this podcast that Sanjeev and I are going to do a free webinar about how you can invest in real estate to get passive income. So be on the lookout for that. And I also have a link to sign up in the show notes. With all that being said, whether you're an American or you're a non-resident Indian listening to this episode, Sanjeev has some awesome information he's going to be giving out about how you can get started in real estate investing and invest all over the world. So let's jump right into it. This is the Real Estate Marketing Podcast, where we teach you how to grow your real estate business. Whether you're a wholesaler, investor, or realtor, this podcast is for you. Hey, and welcome back to the Real Estate Marketing Podcast. I'm Austin Glanzer.
And I'm Adam Grimm.
And in this episode, we have a super unique thing we are doing, and I am really excited about this. We are bringing on Sanjeev Birari. He is a global real estate expert, and he has been investing in multiple countries around the globe. He's lived in many different countries. He's helping do large development projects in India and in the United States. And I am super excited for our audience to get to know him in this episode and also just get some really cool insight for global investing. So Sanjeev, can you just say hi here?
Hey, hi, Adam, Austin. Thank you very much for having me here.
Yes, we are super excited that you have taken the time to be on here with us. I know you got a lot going on, so you taking the time to answer some of these questions we have and to go over is really, really cool. And I also just want to say here at the beginning, this is really cool for me because through TikTok, I have had a lot of non-resident Indians listening to my stuff, commenting, asking questions. And they are people from India that maybe don't live in India. They live in a different country. They live in America. And I've been wanting to provide them content. So having Sanjeev come on here, who knows how to invest in real estate, knows how to communicate to the NRIs, non-resident Indians, is really, really cool. So Sanjeev, I thank you so much for coming on here. Can you tell us a little bit about yourself?
Thank you so much, Austin. My pleasure to come here and talk to you guys. So see, a couple of things when we talk about NRIs. I mean, I've been into I myself am an NRI since past almost 20 years, and I've lived in Singapore, I lived in Dubai, I lived in Bahrain. And a lot of these countries, of course, in India, because I grew up actually in India. So I probably, I would one of the few people where I've actually had an interaction with non-resident Indians in terms of knowing their psyche in terms of investing in real estate. And when I say this, I mean every geography, every country has got a different psyche of investments. Actually, the pattern of investment is always different. And when I say this, I've learned that all these while since I lived in these countries. Currently, I'm actually based in Bay Area in California, and I'm actually I'm working with one of the Indian real estate company and as a CEO. But at the same time, my passion is actually in real estate, and hence also one of the reasons that I've gathered a lot of information about the behavioral pattern of non-resident Indians, or probably the people who are interested in investing in real estate. So that is what probably I could give you my brief introduction actually.
Yeah, no, that's great. And just for our United States audience, could you just tell a little bit about the company you work for so they can kind of understand you even more?
Sure. So currently, what we are doing here is we are planning actually to build a passive income portfolio of acquiring rental properties, and this is purely and in terms of looking at what is happening. Probably what we have been going through since past couple of months now, and this made me think, or probably made me believe more. The reason being because passive income is so important, and hence is one of the reason that I'm actually trying to build a portfolio of probably almost around 100 properties where I could actually give my investors a benefit of they investing in a property where it could actually give them a passive income. So that's something which is what currently I'm engaged in. At the same time, we are also planning to build active senior living facilities in Bay Area or in California. And yes, we are an Indian group, so we built a lot of properties back in India. Probably, I would actually say the Silicon Valley of India is Bangalore. It's one of the city which is in India, where we have almost 70% of our portfolio in Bangalore, where we have residential commercial properties. So there are a lot of non-resident Indians. They always tend to diversify their portfolio or of purchasing something back in India as well. So they buy, they buy one of the property in India, and they diversify their portfolio of investing in US as well. When if at all if the non-resident Indian is living in US. So yeah, so this is what we are offering currently, Austin. But a lot to talk about it. So we could probably go with the flow.
Yeah, no, that's awesome. And I know passive income is a term everybody is throwing out there. Everybody wants passive income. But there might be somebody listening to this that isn't totally sure, like what is passive income, and even what is a good return on passive income. So could you describe that a little bit of what you look for in passive income?
Perfect, Austin. So I do not want to actually give you a brief about what exactly the passive income is, because most of the investors are very much aware of the definition of passive income. So basically, it's a speculative term which I do not want to get into the actual explanation. However, if you actually think about the importance of this particular term, let me share with you the actual incident happened just probably a few weeks before. One of my friend who actually, or probably one of my acquaintance of mine who lives in Texas, and he in 2012 he has invested in multiple properties, just because he wanted to kind of create a passive income. And this was more of an initiative from him to invest in a portfolio without he would probably be thinking at that point of time to create a passive income, but at the same time to create one of the avenue of getting some funds on a monthly basis. So he started an investment. Today he lives in Texas, and because of the crisis, the COVID crisis, he lost his job. And today he's totally dependent on his monthly income on the employment benefits, which he's getting around, I think, 500 or 600 week or per month, per week. And his monthly outgo is somewhere close to around almost close to $4,000. I mean, 1,200 is dollar he's paying for his monthly outgoing for the house which he has purchased, 2,500 to take care of his family of five, and his monthly outgo is around $4,000. But if you see today, what is actually kind of paying all these bills is this, that the portfolio which he created in 2012 is paying him 2,500 or close to $2,500 a month. And $2,500 a month from the passive income which he actually created in 2012, and at the same time the employment benefit of around $1,800 is what he's actually getting it to take care of his family in such a crucial time. So what I see, or what probably I would rather say to everyone, don't treat passive income as something which is going to be like something which you could probably add on as an add-on. It create. Today, after COVID, what I've realized is this is more of a secured, dependable cash flow. And that is something which is, what we've realized. So for me, if at all, if somebody is really talking about passive income, I would probably say COVID taught us a lot of things. And this is one of the things which you should, we all should be doing it, is getting into a secured, dependable cash flow by investing in asset class, which is real estate.
Yeah, that's great advice. And that's a cool story that your friend, he was able to do that 8 years ago and he's still collecting income to, provide for his family. So you mentioned COVID a couple times, COVID-19. And can you just talk a little bit about how COVID-19 has affected your business and maybe changed the way that you go about business?
Sure. So, see, Austin, I see COVID actually taught us a lot of things. Probably, most of the CEOs, most of the, the companies, the managing directors of the companies, the owners of the companies, the big corporations, now they are actually thinking about shifting their traditional fundamental base of how to operate business. And that's probably this is going to be probably a turning point for everybody, for that matter. And that's something which is what we've realized over all these 3-4 months, when we've all got shelter in place. The whole world is actually in shelter in place. So one of the very prominent things which I would probably say to all of the investors is that, listen, I mean, from going forward, you would probably see some 360-degree changes in a lot of businesses. And because the businesses have actually, are thinking now in terms of changing their fundamental operations, the fundamental basics of operations, and that's something which is probably we all could see a change is coming in, and hence we need to be prepared for it. Having said that, even if at all, if you see COVID, right? I mean, COVID is one of the pandemic which we all have actually gone through. We don't know. I mean, we probably it's just a start. Probably, you next 3-4 months down the line, 3-4 years down the line, you would probably have something else is coming up. But the fundamentally what is not going to change is our income stream. Today, most of the people are employed. They are totally dependent on a single revenue which is coming in from from their salaries or their paychecks which they get, right? So today, COVID actually is COVID has taught us, or probably COVID is pushing all of us to think about creating an alternate channel of investment by putting some smaller investments in these, real estate asset class to create something which is what we call it as a secured, dependable cash flow. And that is what I feel the COVID has actually pushed most of the businesses, most of the thought process. I mean, the thought process of most all of our investors.
So, Sanjeev, I know you have developed an extensive profile and have a lot of experience in this area. If you were starting at day one today, so if you were just getting off the ground and you listen to this podcast, ready to move, can you give us some tips about where you would start, what you'd be looking at, what your next moves would be if you were kind of starting from zero?
If at all, if I have to start from zero, to very honest, yes, whatever experience you actually have, said in introducing me, being very honest, I actually have to start from zero now, because the reason being, because as I said to you, right, I mean, the fundamental change in the business is actually needs to change, and it is already changing. Now, if at all I have to start from zero from today, I would rather say that I would create a smaller income stream in terms of having certain savings, keeping aside being me a CEO or being me a small investor who just started investing from today. So, see, I know saving is something which is for everyone. It's a big term. People say, "Oh no, I mean, I cannot. I don't have money to save." And being very honest, if at all, I put it as a 21 day a pattern. If I do it for 21 days in a row, I'm definitely going to be repeating the same thing again on a 22nd day. And what I feel is that I put a smaller, investments every day, or probably, every week. I go back on what I have actually achieved in that particular week, and keep that particular smaller investments every month to then lead myself to invest in some small portfolio. And if at all if I have to do that, I would rather say, I mean, I'm very specifically talking about from the investor's point of view. I mean, I'm not talking about me as a running the corporation. Now, for an investor's point of view, I would rather say, start thinking about a smaller income coming in from your monthly paychecks. Just put that money. Believe me, the smaller investments would actually, smaller savings of yours would actually push yourself to the bigger investments later. And that is something which is what I feel that we all should be doing it today. If I have to start from today, I'm just I'm thinking, in fact, I'm from March onwards, I've already created my plan for next 3 months, because today we are not aware of where exactly we are heading. Today is something which, because we do not have a data point, we do not have any benchmark, we do not have any parameters to compare that what exactly is, because COVID is something which is has first time it hit, right? But what we could gather is what I would rather say is that, see, the fundamental one thing is not going to be changing is our saving pattern, and our actually thought process of how do you look at your savings actually. And that is something which is I would give more emphasis to all of the investors. I have done that. I'm doing it. I would probably be, and hence that's some of the reason that we have certain, methodologies which we have come up with, which we could probably talk later when we have a, regular sessions on the webinar. And that's something which is what I would want to, kind of explain all my audiences today, that we are coming up with a pattern of investments where you could probably start, and we could actually tell you that this is what you could do. And this is a very, good questions which you asked me, but that's something which we could, probably, talk about over the time when we start our sessions.
Yeah, and I think it's really cool that you're, preaching this to, your audience as well. I think it's cool that these principles go hand in hand anywhere in the world, because we say the same thing in America. You say the same thing in India. If you're getting a paycheck, you should put some money aside to save for the future, because you don't know what's going to happen in the future. So that's really cool that you're preaching that as well. Now, okay, here's a question. So as somebody saves their money, they start building up a savings. How can they then diversify their assets?
Mm-hmm. So, see, diversifying in the assets would start as low as you. If I always tell everyone, I mean, if your saving is $100 today, I'm not asking you to put all $100 in real estate, right? I mean, definitely everyone, it would actually be having certain certain the aims for, or your own short term or a long term aims as well, right? So what I always say is that if you have $100 as a saving, just put those $100 in a $20 category, and then diversify that $20 portfolio of each in different segments. Say probably $20 you would probably put in equity, $20 you would probably putting in your insurance premium, $20 you would probably putting in real estate, and $20 you would probably putting in some other things which you would want to kind of invest in. But that $20 as well, I would always say that, okay, put that $20 in something, again, diversify that particular $20 in, probably if you are an NRI, put it 10 in US, 10 in India. I mean, see, it all depends, because see, both the ends you could actually leverage, right? I mean, it's not that I'm asking you to put $20. Like I'm just saying that this is what your diversification it should be. If your $100 since the beginning, which you started probably working or getting your paycheck today, if you start following this rule, believe me, next 10 years down the line, you are probably 5 years down the line, you would have a portfolio, or you would have these income streams generated in no time, can actually pay back, and you would actually do an early retirement for that matter. I've seen people, because I've been doing this since past 15 years now, and I've been seeing people, they are actually getting retired literally as early as like 35 or probably 34 for that matter. And these are actually live examples. I mean, I could actually put them on a call with us as well, and we could talk. And this is what eventually we are going to be doing it in the webinars as well.
Yeah, that's really great. That's great advice. Now, best practices are to not date your podcast, but because COVID-19 was such a big deal, I think we should talk about it and even kind of give some advice about that. So in your world, Sanjeev, how is post-COVID investing different than pre-COVID investing?
Yes. So, Austin, see, the thing is, one thing is very clear about it, that the change is not going to happen on the income end. I mean, in terms of the savings end, sorry, not the income end. See, even if at all, if you are, as I said to you, right? I mean, my friend has actually started as just the thought process of investing in real estate. Today, that particular passive income literally survived him because of all this. I mean, 3 months before, we all were like, having a great time in terms of, expecting good turnaround from your investments in stocks or from your investments in properties. But at this 3 months have changed, or probably changed a lot of things upside down. I see this change would probably had forced the people who actually have not thought about it for creating an alternative channel for an investment. And hence, I feel that post-COVID, most of the people, if at all, if they, and this is what our aim is, that we actually want to, try or explain people about or educate people about, that this is what the thing post COVID we all have learned, that this is what we should be doing. It we need to create an alternative avenue of incomes, and how do we do it is what we are actually there to help you out. So I see that post COVID, most of the people probably, I think 40 or 50% of the clientele where they pre-COVID were not thinking about an investment would probably get into the investments, and that is what our ultimate aim is. And this is what we actually have been, I've been talking to people about it.
Yeah, that's really, really good stuff there. So, you're talking about people had money in stock market, they had their money in other means to invest. So, what would be a good return that you try to get in a rental property?
So, Austin, see, I mean, I would not rate any of the investment bad. I'm being very honest. If at all, if you as an investor are investing in stocks or investing in bonds or investing in real estate, I would rather say everything is good as far as your savings are actually getting invested in a better better future for you, right? So, but I always tell everybody that if you are investing, please invest. If your saving is 100, put all that $100 in, diversify your $100 in different stream. So just to answer your question in terms of what I would rather expect as a rental or a passive income, see, today the money is available for cheap, right? It's like the interest rate has gone down to 3.5. Now if you see, if your income is around 7 or 8%, rental income is around 7 or 8%, and if you're buying money for 3.5%, you're practically a positive cash flow of around 4%. And that is what I could say. 6.5% return or 7% return is better on a dollar term. It's a super return for any of the, it could survive, you would survive from any of the COVIDs for that matter, if you have this particular stream is actually on for you. Today, in fact, is more good because today the interest rate is the lowest today in US, which I could probably see 3.5, right? And as I said to you, if your rental income is around 7 and if you're buying money for 3.5, you basically end up spending somewhere close to around 4%. I mean, you're getting 4% from your investment. That is something which is I see is a super return.
Yeah, that is really cool to think about. And I had not really put that into perspective. Like if you can get money for 3.5% and then you can get a return for 7, I mean, you're just making 4%. That's awesome. So I kind of want to touch both of our audiences here, our United States audience and our NRI audience. So what's different about the United States investing and investing overseas? Like how is that different?
Okay, so Austin, I've invested myself in Singapore, Dubai, India, and of course in the US as well. See, most of these markets have actually, I mean, probably US it's a highly organized market in terms of real estate is concerned. When I was in Dubai, pre 2008, it was not a very organized market. After 2008, they made all the regulatories governed by the government, and hence it actually a more organized market later from 2008 onwards. India, just recently, 3 years before, they've introduced the upper parliament, and the lower parliament has actually introduced a law for real estate called RERA, Real Estate Regulatory Act. and hence that particular those markets are also now more organized markets. Having said that, every market has got their own own returns, their own ups and downs. Actually, I see both the markets. So if I have to only compare with US and India at this point of time, US would always a better for getting a good passive income. If you think about India, it's in India, in a residential investment, you don't get good returns. You would get probably around 2.5% of returns. But a capital appreciation, which is upside on the property investment, is very high in India. And hence, I would rather say that if you're thinking about a change or a difference in both the markets, I feel that India has more returns. If you invest in India, you would probably be gaining more in a capital appreciation, on the property investment. And in US, you would probably get more passive income, and that is something which is what the beauty of both the markets.
Yeah, that's interesting. I never knew that, so that's really cool. So, okay, we probably have a lot of people who are listening to this that might be kind of new to investing, and they're like, okay, I have money, I want to save, I want to start investing. So, what can people do to start investing, and how's your business helping people invest?
Sure. So if you're thinking about investing in the US, we do have syndications. We've actually, already formed a group of investors where you could probably, invest as low as around $20,000 to start with, or probably even, of $10,000 as well, because we could probably put you in that group, and the whole group is actually, buying multiple properties, and we are only buying those properties which are giving us, better rental yields. So as I said to you, around 6.5 to 7% is what we could easily get on your investment returns. So that's something which is good out there. If you're thinking about investing in India, then we do have our own portfolio where you could probably invest in Bangalore, which is the Silicon Valley of India. And you could probably get in literally 5 to 6 years down the line, you would probably get almost close to around 120 to 130% of returns on your investment in terms of capital appreciation is concerned. So you need to buy on a particular property today, and in next 5 to 6 years time, if you sell that particular property, you would get a better returns in terms of doubling your money within literally 6 to 7 years down the line. And these are the opportunities which we have from both the markets. I mean, that's something which is where we could definitely explain you more when we talk during our webinar in terms of what exactly the actual portfolio which we would want to offer it to you.
Yeah, that's great. I think that's really, really cool that you're doing that, where people can invest smaller amounts but get their money put into larger projects and larger rental markets. So I think that's really cool you're doing that. And I want to transition in here a little bit about the webinar that we're going to be doing here, because you just have so much information that you want to provide to people and help people invest in passive income. So can you talk a little bit about the webinar that we're going to be doing here?
Sure. So I mean, we've been already doing the series of webinars, and probably pre-COVID or post-COVID, probably most of the people are literally fed up about the webinar. So I don't want to actually do this webinar for so long. Probably people don't want to stick to the webinars for at least 40-50 minutes. So we've actually come up with episodes of 10 minutes webinar or 15 minutes webinar, and that's something which could probably give you a better insight about to start with. How do we start on a smaller portfolio? And it's not going to be only a one-way webinar. We could also ask questions we take live questions from the audiences. We give them the actual answers in terms of what exactly the practicality of you investing in a smaller amount, and we could even show you the people who have already invested in during the COVID. So I'm not talking about pre-COVID, because as I said, right, I mean, pre-COVID, whatever you need to start something from the beginning, and that is something which is what I'm trying to explain you here. So we've got a lot of stuff to tell you about, but definitely we would come in smaller packets of 10-15 minutes, so that you could probably log in again and again and get that particular examples, and you yourself can try by investing smaller amounts, so you could probably see those returns coming in in a quicker time. And that's something which we would like to achieve as our aim in terms of spreading the word in what we've learned during the COVID crisis and in 2008 crisis as well.
Yeah, I'm very excited to do that with you here and kind of just give some advice about passive income, how to, buy rental properties and go through that training with you in these quicker webinar series. So if you're listening to this and you're interested in that, I do have a sign up in the show notes in this episode. So if you just go to that, you'll be able to click in the link and sign up for the webinars so we can reach out to you whenever they are scheduled. And I think Sanjeev, he is sending out an email as well for people to sign up in that as well. So if you're listening to this and you are interested in investing for passive income, you might not have a ton of money, but you've saved and you want to put it towards something, this could be a great opportunity for you to get some free education on how to get a passive income. So I'm really excited about that, to do that with you, Sanjeev. And it's been really fun to talk with you about that over the past, I don't know, maybe month since we've been talking. I think it's been pretty cool.
Absolutely, Austin. I'm equally excited. I know you have a lot of Indian followers on non-resident Indian followers as well on your TikTok, and probably one of the reason we met is TikTok, right? So
yeah,
we.
that was it.
Yeah, you've been putting a lot of efforts on helping people about it, and I really like that approach of yours, Austin. And this is something which is exciting, believe me. I mean, this journey. I mean, I would rather say that I definitely want to get your expertise to the people with whom they have been associated with since 15 years from Europe, from Gulf or from Asia. So I think definitely this is something which is interesting for them to kind of to hear you as well, and then of course to hear me too. So we definitely would want to kind of get into this journey, Austin.
Yeah, well, I'm super excited about it too. Thanks for the kind words there. And like I said, that link is in the show notes. I think Sanjeev, he sent out an email as well. So check your email and you can sign up for it on our website. And then we will let you know when these webinars are happening. So thanks so much for your time, Sanjeev. And I know you got stuff going on. And to our listeners, thanks for taking the time to listen to this. And we will talk to you guys later.
Thank you so much, Adam. Thanks, Austin. Appreciate your time. Thank you.
Thanks again for listening to this episode of the Real Estate Marketing Podcast. If you're interested in signing up for that free webinar with Sanjeev and myself, you can get to it in the show notes, or you can go to glanzair.com, click the resources tab, and you'll see the webinars right there. As always, if you would not mind subscribing, liking this podcast, and even giving a review, that would be super helpful for us as we're trying to get more people to listen to our content. Thanks again, and I hope you have a great week.